President Trump told reporters this week he plans to write to global leaders outlining a blanket unilateral tariff rate, which he said could be 10 to 15%. The president already has sent about 24 letters to trading partners, including the EU, Japan, and South Korea, laying out tariff rates that will kick in August 1st, Joe.
All right. Drum roll, please. With us now, author and journalist Dylan Ratigan, Money Party. He's anchored shows on MSNBC and CNBC. He's now the CEO of Euphoria Sneakers and owner of reservations.com. It is, baby, a 2025 Money Party. How are you, Dylan?
It's been too long, Joe. I'm so disappointed we're not in the same room. I give you a big, giant hug, but it's nice to see you, and thanks for letting me pop in on you guys.
Next time. I know you want to talk about tariffs. Before we get there, though, I want to talk about Money Party. Because when we were talking about a Money Party in 2009, 2010, the United States had spent first 230 years or so of its existence accumulating a $10 trillion national debt. We're at $37 trillion now. This bill is adding another $4 trillion to it. We're going to add another $20 trillion over the next decade. You talk about a money party. How in the world does the United States of America continue to remain the preeminent power on the face of the earth if we spend ourselves into debt to such a degree that we make the bond traders run for the hills?
Yeah, I mean, that is the single most important question for America right now. And the referendum, as you know, Joe, is the U.S. dollar. The reason the United States has been the dominant country on earth since World War II is because we have had the global reserve currency. We secured that position after World War II. It supported the development of our tech industry, globally dominant. Our entertainment industry, globally dominant. Our finance industry, globally dominant. It supported the biggest military in the world. And what is happening under the current administration and under the tariffs and under the tax policy? The U.S. dollar is effectively in collapse. The U.S. dollar is down 20% over the last 6 months. Most people in the United States don't understand it so much because they don't live in a multi-currency world. I've been living, as you know, in Milan for the last, 6 or 7 years, and I'm very aware, particularly with the Italian sneaker business with Euphoria. We produce in one country, we sell in another country, and Euphoria is a flea on the dog's ass in the scope of global commerce. And so this is nothing. And so imagine what this means for giant multinationals. The referendum that we are getting on the policies of the American government right now is manifesting explicitly in the decline and, dare I say, collapse of the U.S. dollar. And everybody should be very alarmed by that. And it is a call to arms for the Republican Party to intervene. It is a call to arms for the executive class, the banking CEOs, the tech CEOs. There are 100 CEOs in this country that run the most powerful companies in the world, and there is a majority Republican Congress that are the only two groups of people that have the ability right now to intervene, to adjust these policies to prevent a further decline in not only American power, but the underlying foundation of our power, which is our currency.
Right. And by the way, your flea quote there, I always love when you quote Adam Smith. The problem here, though, is not just this
he said it first, but I said it last.
Of course he said it first, except it was a horse and not a dog. But you talk about Republicans in this administration. This has been Republicans and Democrats over the past 25 years. It's
totally
hard to believe, but we actually had a balanced budget in 2000 and 2001. We had a balanced budget 4 years in a row. We had a surplus of $155 billion back in 2001. What can you tell Americans who just don't seem to care about this growing debt? And talk about what happens when we fall off that fiscal cliff and suddenly the United States credit is no good.
Well, what you're looking at is the consequences of a culture of political extremism, a primary process that selects for the most extreme on the left, the most extreme on the right. The majority of Americans are not represented as a matter of sentiment, and the consequence of the extremism is extreme behavior. And extreme behavior is reckless, it is indifferent to the future, and it is a catastrophe for the currency. And ultimately what you're looking at, the risk that you're looking at, is something that you've seen whispers of right now, which is you want a block of cheddar cheese, $10, $15 for a piece of cheese. That's evidence of the decline. It's a tiny indication of it. But what happens is your ability to acquire resources continues to decline. Your relevance in the world continues to decline. Understand, most of the world is not in North and South America. The only reason that North America is relevant to the world is because the United States is the richest, most powerful country in the world. And our historical culture under Democratic leadership, Obama, Biden, under Republican leadership, Trump, has been catastrophic in terms of being irresponsible in both tax policy, spending policy, and international relations. And it has diminished our standing, and it has diminished our currency in a way that has put us at tremendous risk. And the headline would be for the money party consequences. Money becomes less and less valuable, with the most extreme examples being currencies of the world that we won't talk about, like the Turkish lira or the Russian ruble or the Mexican peso, which hopefully is not the future of the United States. I don't think that it is.
Dylan, we're so happy the Money Party is back. It brings me endless joy to see your face on our screen, my man. It's great to see you. We miss you.
The feeling is mutual.
We miss you. Let's talk about Euphoria and what you've been up to lately in Italy, looking all tanned and stylish and Italian there. This debuted the sneaker at Paris Fashion Week, and now it's like the hottest thing in Italy. Talk about the company.
I have them, Sam. We have them in studio. There's the website, but we have them right now on the set. The short version is, a couple of years ago, one of the PayPal founders called me and wanted to do a private collection for the 20th anniversary reunion. I called the factory. We partnered with some artists. We made the shoes. It was more like a fun party thing, but the shoes turned out really well. People responded really well to them, and so we honestly kept going until we had a full collection. And then, as you said, we presented the full collection in Paris a couple of weeks ago. My favorite one, I have the rainbow one in front of me here, and then the hot pink, and you can see those are the ones that are partnered with the artists. And it's been a bomb. I don't know. I mean, basically, I've had to lose 25. I no longer eat, Willie. I had to lose 30 pounds because you can't be a fat. If you're above 10% body fat, you're fired. And so, food is in the past. I've had to take. I'm now. It's just caffeine and cigarettes.
Very Italian of you. Yes.
And so it's. You kind of go with what happens, and in this case, the factory was fantastic. The people are fantastic, and the response has just been on. You can't make it up, Willie. I don't know what to tell you. I just need to get you some sneakers, and you can enjoy them.
Let me just say, I'm sitting here with Dylan, and I can confirm he stinks of espresso. He looks great, though. He looks great. The shoes are fantastic, man. I'm gonna snag a pair at some point. First of all, I liked your hydroponics phase better than your shoe phase, but we'll get.
Okay.
Don't worry about that. The shoe phase
is that a weed thing?
No. Oh, when you were growing the lettuce.
I was growing lettuce. I should have been growing weed.
You should have been growing weed. You were ahead of your time.
But I think the sneakers are going to be the way.
Probably.
Anyway, go ahead.
Let's talk politics a little bit, or let's try to talk politics a little bit. Because you mentioned the tariffs. There's so much uncertainty around what's going to happen. Mm-hmm. I guess we have a couple weeks until August 1st hits, and then things are going to, I suppose, go up. We don't know if he's going to taco it again and chicken out. Just talk a bit about the uncertainty, because we don't know what the tariff levels are going to end up being. But I think a lot of people look at this stuff and say, well, it's going to be fine because he always chickens out, and, this back and forth, this yo-yo, it doesn't really matter. But does it matter? Does it affect businesses?
It does matter. It matters because of the uncertainty creates hesitation to drive budgets and hiring. So let's assume that the stock market is right and that the tariffs will end up being moderate, reciprocal, and tolerable.
Sure.
Which is where the bond market has it priced. It's where the stock market has it priced.
Right.
But that's still something that is possible, but not a certainty. We don't know for sure. We've seen some extreme behavior. And because of that even marginal uncertainty, you already are seeing a hesitation in international budgeting, whether it's Volkswagen coming this way or whether it's, Coca-Cola in the world of all these big multinationals. Like I mentioned, Euphoria, a flea on a horse's ass, Joe.
Yes.
Excuse me. But it's even with a tiny company like Euphoria, you see it because you're like, well, do we really want to invest in building a store in the United States when we don't know what the actual cost is going to be? But the other thing that I think really has to be understood is we saw the inflation data in June come out, and inflation is back. Inflation was a huge issue under the Biden administration. Trump won on the basis of saying he is going to solve that problem, only to come into office and advocate for extreme tariffs that have driven a complete return of inflation. And the return of inflation, which we just saw for the June numbers, we just saw them in the last couple of days, but it's real and it's back and it's not a theory, also makes it more difficult for the Federal Reserve to cut interest rates. So if you have a slowing economy, you have rising prices, it makes it more difficult for the Fed to cut interest rates. And so that is a negative soup that doesn't need to exist. If the president wanted to get rates lower and to do something for the economy,
right.
to create tariff clarity today and say, well, I'm going to do 5% or 10% reciprocal tariffs on every country, everywhere, all the time, with some special exceptions for whatever it may be, steel or Canada or Mexico, the whole thing would come to a much, much better condition. The uncertainty is a bigger issue than the tax numbers right now.
And it turns out you can't wave a wand and lower inflation, as the president promised he would during the campaign.
Well, you also
CEO
can't
of
raise
Euphoria.
prices. Sorry, Will.
Right.
You can't
No.
raise the price of
Yeah.
everything and then expect things to
Correct.
go lower. Anyway, sorry, you're about to say something.
Turns out that happens with tariffs. A Morning Joe Hall of Famer, one of our favorite people
Yes.
ever, Dylan Radigan,
You got to
the
have me.
CEO of
We got to go
Euphoria
live from
Sneakers.
Milan. I want to be live from
I think
Milan,
that's a
Willie.
great
when are we doing
idea.
The live? When are we doing Radigan
I want to
live
live
from
your
Milan?
lifestyle.
Come on
Coffee,
over.
cigarettes, and artistic sneakers. Size 13, by the way, Dylan. Great
Coming
to see
to
you,
you.
my friend.
Coming to you.
All right.